let me the way. Haven't changed, had much to say. But man, I still think them cats are crazy.
Live from LA Convention Center, nationwide, coast to coast, 65 million TV homes strong. Every single day, Sully's BizBrew, like the pen says.
You got fancy pens now for the expo.
I don't know who sent these to us. I think it was a listener or a viewer. I have no idea. Was it the pen guy, Chris? Oh,
the pen guy. That makes sense. The pen guy sent us pens. That was kind.
I thought it was some hot chick out of Atlanta. I wanted to send me some pens.
She wanted you to write down her number, and she thought you needed a pen because you didn't write it down.
Coach Deb here. Coach Deb wrote the first book on social media called Twitterific. Twittertastic. It was Twitter Revolution.
Yes.
What's interesting is Deb doesn't even use Twitter anymore, which I think is great.
Yeah,
She's starting a new media company. It has nothing to do with Twitter.
Not much.
Of course, we've got Alon Gorin on, who's our crowd investing expert on both of our national television shows, and he, of course, is the founder and organizer of the Crowd Invest Summit here in Los Angeles. And we've been talking about broadcasting here for some time here, and part of the Crowd Invest space is around real estate. And here to talk about that, Adam Kaufman. Adam Kaufman is the co-founder and managing director of a company called ArborCrowd, and he joins us here on BizBrew. How are you, man?
I'm doing well. Thanks for having
me. So take us through, first of all, from your purview, the crowd invest space, and then sort of fill in your metrics on the real estate side and how you fit into it.
So obviously, crowdfunding is a big space. There's everything from Indiegogo to Kickstarter, and a lot of campaigns right now, even to help the relief going on in Texas for the hurricane. But focus on real estate.
But those that you talked about are product-based, not-for-profit based, pre-sales based.
Yes.
You're talking about something completely different here.
Exactly. So about a few years ago, with the passage of the Jobs Act in 2012, all of a sudden you were allowed to generally solicit the public online to come in and invest in securities
through
offerings.
a Reg A Plus offering.
Well, we actually operate a little bit differently. Reg A Plus offerings, came into existence about a year ago, and those are really structured very similar to a non-publicly traded REIT or a private equity shop.
So taking somebody public, then, is what you're saying.
They actually raise an enormous amount of money to then go in and invest in the real estate. We operate a little bit differently.
Okay.
We operate under a Reg C crowdfunding, Regulation D crowdfunding, where we actually we buy the property first, then we present it to the crowd and say, here, why don't you come in and invest in this real estate opportunity after we have already closed on the property, met with the sponsors, and done our due diligence to present it then to the crowd.
So basically, it's a fractional ownership of whatever asset you guys have identified as either as a long-term investment or as a yield type of investment on a monthly basis,
exactly.
Whatever your category might be.
Exactly. So it's a long-term investment, and we're constantly looking at different deals from our publicly traded REIT, which is the other side of our business, our parent company, and our family of companies. So we're seeing all of these deals come through, and for the first time ever, we're able to present these deals to a whole new class of investors, these retail investors.
Right.
And we understood that the market was shifting and moving towards that direction, and there was an invitation to allow these retail investors to participate in these investments outside of the stock market or the ordinary investment vehicles that they're used to.
Adam, I got to ask you. So you talked about operating under a different method. Are normal crowdfund in the real estate space different than that? Do they raise money then go buy assets? Is that really the big difference?
Yes, very much so. At the end of the day, it really comes down to who's backing you. Are you VC backed? In which case, you have to raise that equity to get to the table with the sponsor to close on that transaction. So you have to raise that money, first. With us, what we can do is we're backed by a big institution. We can close on the transaction that we're already doing the debt and servicing the debt on the other side of the business, and then go to the crowd and offer them the opportunity.
Can you do it in reverse?
We could do it in reverse, but there's no reason, because we go to the crowd and say there's no risk that this property won't close.
And that's the benefit for the investor, is that the close is already done. It's not a function of raising enough money to buy this asset. The asset's in place first.
Exactly.
Talk about returns for investors. Is this so obviously if you invest in a publicly traded company, it's a very liquid sort of investment. You got T+3 and you got cash in your hand. Real estate's always been different, but if you talk about debt guys versus equity guys, real estate guys versus equity guys, returns are very similar over the course of time, especially in California. However, people seem to be shifting their money into real estate now because you got a volatile stock market. Talk about that and talk about return on investment for investors.
So, people obviously are shifting away from the volatility of the stock market, but if you're to look at your options, if you're were to look at the stock market's gambling. You're taking risks. You look at investing in bonds. You're really yielding 3% returns on your money. Now you have access to invest in real estate, where it's deal specific for us, but you can earn on our current deal, for example, a 16 to 19% IRR, internal rate of return, with a 1.5 to 1.8 equity multiple. So your return structures are far greater, and you're investing in the actual asset class of real estate.
With respect to size of investment for your intended investors, okay, when you go to the crowd, so to speak, when you are crowdsourcing this investment, talk about typical size of a building or a residence or an asset. Talk about the average size of an investor.
So the asset class, it really doesn't matter. The asset size doesn't matter. We focus on multifamily workforce housing. It could be a $70 million transaction or a $20 million transaction.
So multifamily workforce housing.
Yes.
Interesting.
We find that to be the most stable asset class that there is, and that's kind of our bread and butter, and where we feel the most.
And is there a geographic specificity? Or
all over the U.S.
Okay.
All over the U.S. And what really we know right now as a company, ArborCrowd, we can write a check between $2 and $6 million. So if the transaction is going to cost $70 million, or if it's really $20 million, it doesn't matter, because we know what our check size is.
Right.
Turn to the investor side, we're looking at a $25,000 minimum investment from our investors. Funny enough, our average is actually $54,000 to date.
Okay, and then talk about exit. Talk about path of liquidity and some exit strategy for the investor.
And that's the beauty of what we do in being deal specific, because every investor has a different preference. Some people can have their money tied up for a longer period of time and feel more confident in a more secure asset, where other people are looking to get in and get out really quickly and are willing to take a little more risk.
Sure.
So we cater towards the different types of investor classes that we have in our network.
Mm-hmm. You do have to decide what that is before you get into the investment, or can you get out at any time?
Well, as the investor, they see all of the materials and the documents that really describe the transaction.
So they know on the way in which way
So they know on the way in. And
we
take a great deal to really promote the transparency of the transaction up front, so people can really educate and understand themselves, and obviously call us if they have any questions.
Adam Kaufman is his name. Adam Kaufman is the co-founder and managing director of ArborCrowd. Anything on the horizon that you're, obviously this is a moving target, this crowdfunding over the last 5 years. Have things stabilized for you guys? Are you seeing more regulation on the horizon? Are you seeing more open doors on the horizon? Because I know for you that's got to be the biggest concern, because it feels pretty good right now.
So everything's been going well. If you actually look at the most recent hearings taking place in Congress, things are opening up even more. But as they say, once the first bad thing and somebody does something or pushes the limits, that's when the regulations kind of kick in. It's a responsive mechanism, but we feel really confident in what we're doing. We're backed by a publicly traded institution, so we operate very well within the lines.
What do you? Before I let you get out of here, what's next for you guys? Are you looking at properties? Are you looking for investors? Are you doing both? And how do people get involved?
We are currently launching a new deal in San Antonio.
Okay.
We're really excited. We just teed that up. We just closed on our last deal, Lago Paradiso, about a few weeks ago. Raised over $4 million in 6 weeks.
Wow.
Which was great for us.
And I'm assuming if people want to get involved, they go to ArborCrowd.com and they can download prospectus, portfolios, and opportunities.
You can go to ArborCrowd.com. You can see the basic information of the deal that we're having. If you create an account, you can get access to all of the deal materials that we have on the back end.
I want to have you back on the air when we're not I want to get you in studio with us and maybe make you our real estate guy, because I think we could spend an hour with you. I appreciate your time. His name's Adam Kaufman, co-founder, managing director of ArborCrowd. If you want more information, ArborCrowd.com. Coach Deb's here with me. I'm Sully. It's BizBrew, nationwide, coast to coast, 65 million homes strong. Maybe we get to talk to Carlos Amesco before he goes. You've seen Carlos on TV before? He's a very big deal. I'm going to act like I don't.
Yeah, I like his tie.
BizBrew.